a lot of people were expecting the Fed, or at least the government overall, to maybe be there to step in. And this looks like that maybe they're saying no.
Okay, so First Republic is really quite painfully wedged between a rock and a hard place here. The bank needs a deal to survive, and a deal needs to involve either one bigger bank or a few bigger banks. But they don't want to do it without government assistance. And government assistance would probably look like the US regulator taking over some of the less desirable assets of First Republic Bank. But here's the rub. The government doesn't want to do that necessarily because that would involve a big hit to its deposit insurance fund. And recall, it's already taken a $23 billion hit from the collapse of Silicon Valley Bank and from Signature Bank. So the latest twist here is that the FDIC is considering potentially lowering the bank's CAMELS rating, and that would then curb potentially its access to Fed liquidity backstops, such as the discount window and the emergency lending facility. Now, the interesting thing here is that one might infer that the FDIC, the US regulators, are trying to force the bank's hands here a little bit to come to the table and do a deal, because if First Republic can't access those facilities, things really look even worse than they already look, and the banks don't want it to fail necessarily because they have already injected about $30 billion of deposits into this lender. So what happens to those if the bank collapses? Who knows? But again, it doesn't look good.